So in this video, I'm going to go over how I analyze stocks so that way you can make the big bucks, bro. Hey everybody, I'm Ryan Foster. In this channel, we talk about personal finance, investing, real estate, and much more. So drop a like and subscribe if you haven't already, and join me on your journey to financial freedom. And without further ado, let's get into today's video. So first thing, when it comes to analyzing stocks, what I do is I want to look at a stock that has a good, healthy, long-term chart and it's just sustainable. Something that if I'm going to invest my money into it, I don't want to end up losing my money. So I want to really make sure that this company is going to probably do well. And I just want to see a past performance of a good, healthy stock chart. So the main thing on these charts is I really look at the past, really where the markets were down, those recession areas. And I really try to see how beaten down this stock was. And now I want to see the stock where it's surpassed the last recession mark significantly. I want to see the stock since the last recession, it's went and made new highs since then. And that proves to me that the stock is relatively strong and it could be a good investment. If it's done it in the past before, it may be able to do it in the future. Not a guarantee, but I like to see that. If I see a stock that has not made new highs since that last recession, it really kind of worries me and makes me think that the company hasn't really bounced back in share price, and that really concerns me for a long-term investment. So the next thing I really like to look at is dividends. And the reason I want to look at dividends is because I like the idea of getting paid some passive income from dividends, and I enroll in the DRIP program personally. So what that means is it's a dividend reinvestment program. Basically, anytime you get paid out a dividend, it then reinvests that and buys more shares of the stock. So I want to see a stock that has good dividend growth, and I like to look back and see how long they've been paying out a dividend for. I really like to see something that's paid out for 10 plus years or so, if possible. If it's a newer company, maybe they might not have that. I just like the idea of having two different ways to make money in the stocks. One being appreciation and the second one being a dividend payout. So that way I feel a little bit better about my position. I am getting paid even if the stock were down. And I also like to look back and see also if that stock has cut that dividend in the past. Let's say there was a recession in the past, and I like to look back at those recessions just to see, hey, when they were slow, did they end up cutting that dividend at all? But just because a stock did cut its dividend doesn't necessarily mean that it's a bad stock at all or not that strong. It's just something some companies do just to kind of protect themselves, which I understand. Now, when it comes to dividend yields, ideally I would like to see above 2%. And the reason I say that is on average, the dollar depreciates 2% per year on average. Now, it might change year to year, obviously, but that's historically, on average, it depreciates about 2% per year. So I think if I get a dividend payout of at least 2% on my investment of shares, then that kind of makes me feel a little bit better, me personally, obviously, a little bit better about that stock. And I know that it's at least keeping up with inflation with those payouts. So it doesn't make me feel as guilty about buying it and like I'm losing money if the stock isn't performing well, but it just gives me that a little bit of a hedge on inflation there. Also, another thing I like to look for when regarding to dividends is I like to see a payout of 50% or less. And the reason for that is because I like to see that a company is still not paying out every single thing that they own to that shareholder. They still are able to keep some of that money within the company for organic growth and reinvestments and other things, not just necessarily paying out everything they do have. Another thing I like to look for is brand recognition on that stock or company. So I like to see a company that's well branded, where that brand, you know that it's a good company overall and they do the correct thing, they're ethical, they have high integrity, things of that nature. And that really is kind of important. You don't want to have a company, for me personally, I don't want to invest in a company for the long term if it's done shady things in the past. That kind of really deters me from that stock. I like to find stocks that are like, yes, this is a family type company. Maybe it's not a family brand necessarily, but it still has a positive light. Like if there was a bad situation, this company would do the right thing and take care of you. If there's like a bad transaction, the customer had a problem with their product, they would take care of that and either refund the money, do the correct thing if there was any issues. So one of the websites I really like to use for looking at stock charts is bigcharts.com. You'll see that here shortly, along with dividend.com, because it does have a ton of information. So let's get into it. Okay, so here's Johnson & Johnson. This is kind of a pretty close to a perfect example. So you can see here back in the 87 crash, obviously the stock chart looks pretty healthy going up. Obviously you can have some dips and things of that nature. It's a little bit choppy up the top, but overall you see a nice healthy growth. And this is the all data on this stock. So since it was debuted, or as much as they can do as possible. You see how it's that dip made new highs. Even in the 2000s crash and the 09 crash, the lows still made new highs, or higher lows, and then also this was the kind of peak before that crash, and it also made a new high here, and then this past made a new high too, and now we're kind of in this 2020 crash here. So overall it's made new highs, which I think is really important, and I like to see this nice healthy slow growth increase over time. Another thing that it has is right now it's paying out almost a 3%, 2.83% dividend yield, and it's been growing that dividend for 57 straight years. So that means, you know, it's been consistently paying out a dividend, and it's increased it year after year for 57 straight years. And also it's only at 44%, meaning that it's under that 50% mark. So that tells me that of all of their earnings, they're not paying out more than half. They're paying less than half out to its shareholders, so they're able to keep over 50% within the company itself. Okay, so here's another pretty good example. Not the best, but still a pretty good example. This is the 87 crash. Obviously made new highs since then. You can see this nice healthy increase of that stock chart. I really like to see this. This seems a little bit exponential, but I like to see this nice growth over the long haul. So here we are again. This is kind of the crash, and it didn't do terribly. Higher lows too. Made this nice increase. Obviously it's making new highs. Now on this one it's paying out about a 3% dividend, 43-year growth on that dividend. However, it is paying a 66%. So that's on the higher side. Is that terrible? No, not necessarily. The 50% thing is pretty much just a guideline for me, not necessarily an end-all be-all. I don't like to see it too much higher than that though. So this one still is pretty good. Like I said, not the absolute best for me, but it's still really good. That payout ratio for them, they've been in business for so long, it's not as huge of a deal. They manage their cash pretty well, it seems like. So this is still a good thing. Now if this were at like 90%, 95%, that's really kind of concerning. Anything over like 85 is really where I really try to avoid it, but ideally I want to stick to around 50%, but this one still, with that nice healthy chart, I still think it's a good buy. McDonald's is a good company, and they've been around for a long time as well. Now I do want to go through and show you a bad stock chart, to me in my opinion, how this really differs, and I would really try to avoid something like this, so that way you can kind of see the good and the bad. So this one's GE. This is all the data here, and as you can see on this one, 87, it did make new highs in the 99s, but then it kind of crashed in the 2000s. That's when it started to crash, and didn't really bottom till 2000, a little after 2003. And then the 08, it did not make new highs from 99, so it did not fully recover, and then it ended up making, in 2009, made new lows. So that really kind of concerned me on this one. And then as you see, just recently, it didn't even have the full 2020 crash. It was already crashing. Obviously they had some terrible stuff in that company, but to me this almost is kind of like foreshadowing. When I started to see this, when you see this crash and it doesn't make new highs, that to me kind of is concerning, especially when it's making new lows after crashes. So when it's in this range and I'm looking to invest in it and it hasn't made new highs from here, and now here, to me that's kind of concerning. This one doesn't have dividend growth. It's below that. It does have a really low payout ratio, so payout ratio is not huge, but it is still really significant. Just that overall stock chart to me just kind of scary because if I were to buy it at that 50 back in the 99 and now it's sitting at $7 a share, that would be devastating. So I really like to see a nice healthy stock chart. So after seeing GE, I do want to show you one more just so that way you can kind of see, and I want to ask you guys in the comments what your thoughts are for this stock. So let's get into it. So here we are. This one is AT&T. I have had somebody reach out to me in the past and ask me what I thought about this company, and I wasn't really sure on this one myself, and here's why. The stock has went up since 99, and then it had the crash of 2000, and you see this tank here, and then it didn't make new highs, did make lower highs too. So it did have this little bit of crash, and then it just kind of been going sideways. And to me, it's not making new highs, so this is kind of concerning for me. Now, just after seeing that last one, GE, it kind of gives me a similar feeling of this. However, it's not making those lower lows, which is good for and healthy for a company. Now you see the lows are getting higher over a period of time, but the highs are not getting higher. I mean, it looks like he double topped here. As we see, the dividend yield 7%, which is pretty high, but the stock price is pretty beaten down right now. And then it's been growing it for 35 years, which is really nice to see. And it's a payout of almost 60%, 59%. So not too bad. However, and it's a nice good yield on that stock as well. So a lot of people like the stock because of that dividend yield. They are pretty high on that dividend yield, and they've been growing it for some time. But to me, it does have a super healthy chart. I do own some shares of this. I will be honest with you. I do own some shares of this. I don't have a huge position in this because I just am uncertain of the overall appreciation on this stock. So let me know what you guys think in the comments. If it's a good buy still, or what your kind of analysis on AT&T stock is. Drop a like if you do find this video helpful. Also subscribe if you haven't already. And until next time, I will see you in the next video.